Buying a home can be thrilling and a bit daunting. It's likely to be one of the largest financial decisions you ever make in your life. Today, I'm here to walk you through the steps of purchasing a home and addressing any of the questions that I get asked the most from my clients as I walk you through the process of what it takes to purchase a home. Addressing questions I get asked most as I walk you through this process. If you are looking to buy or sell your home, please reach out to me. My name is Shannon Green. I'm your local real estate agent here in Austin, Texas, and I would love to connect with you to find out how I can help you in your home journey. The first step, of course, is going to be your finances. There are different things that you're going to need to consider when it comes to talking about this topic. I'm going to give you 3 things to keep in mind as we walk through this. And first is your savings. If you're going to buy a home, you are going to need some type of down payment more than likely. And depending on the kind of financing you choose, you're going to probably need between 3.5% up to 20% of the sales price for your down payment. There are several different loan options for different buyers, and everyone has something different going on. So it's really important for you to find that loan program that works the best for you. There are FHA loans which require 3.5% down. First-time home buyers choose this as an option quite often. There's also VA loans, there's USDA loans, there's conventional loans. So that you really need to sit down with your lender and figure out what's going to be the best fit for where you are in your life and what you qualify for. The other thing you're going to need to think about is your closing costs. Closing costs generally can be around 3% of the sales price of the home. You want to be prepared to have these closing costs in hand. Some of the fees that go into this can be title work, the loan fees, prepaid mortgage insurance, and taxes that go into escrow. As you go through this lending process, you will see that there are many fees involved. These are just some of them, but when you look at the overall sales price of the home, just know that about 3% of that sales price will cover all of these fees. So the third thing, if you combine those two numbers, you're at 6.5% to 7%, and that is what you need to have in mind when you are ready to purchase a home. That's going to be the minimum amount of savings that you're going to need to cover the closing cost and the down payment. That's if you're doing a 3.5%. If you're going to choose a different program like a 20% down or 10% down, you've got to do the math there and factor that in. When it comes to getting financing, you also want to consider your income. Lenders typically are going to be looking for 2 years of employment history. It doesn't mean you have to have that same job during that period of time. It just means that you need to have consistent work history. And with that work history, a steady income. They're looking for things like no large gaps in employment. And finally, on the finance category, you want to consider your credit score. Now, everyone has a credit score, and typically 620 and above gets you in that good bracket. A lender's going to be looking for someone that has a strong enough credit score that will allow them to go into a loan program with a decent interest rate. Now, the higher your credit score is, the better loan programs, the better rates you're going to get, the better you will look for underwriters who are studying this loan to get you to the closing table. And that magic number in a credit score ideally is 740 plus. So if you're in the 620 range, you are considered good, and there are plenty of options out there. You can still get a loan if you're below the 620, but it becomes higher interest rate, higher fees, just because it's a little bit of a riskier loan to the bank. Now, if you get to that 740 plus, you're in a really sweet spot. Once you know these numbers and you know that your financing is in order, now it's time for you to hire a real estate agent. You're going to want someone to represent you as a buyer. On the selling side, the sellers have their own agent. They are not going to represent your best interest. If you were to call a listing agent directly, it is not their best interest to represent you. To protect yourself, it is in your best interest to hire a buyer's agent to represent you. They are going to work for you, focus on you, negotiate for you, and have your best interests in hand. Once you've met a realtor that you think you want to work with, that you think would work well together with, it's time for you to look at signing a buyer's agency agreement. In this agreement, it discusses what the role of the buyer agent is for you and what their fiduciary duties are, in addition to how they go about getting paid. Many times, hiring a buyer's agent does come at no cost to you. In most cases, sellers, when they sign a listing agreement with a listing agent, they agree to pay that agent a set commission that was negotiated between them, and typically those agents share that commission with the buyer agent that brings the buyer to the table. Now, there may be times when the seller isn't offering enough commission that the listing agent would be able to share that with the buyer's agent. It might make it difficult to split. So there are some cases when you as the buyer might be responsible for paying the buyer agent commission. So just have that conversation with your agent up front. Once this is discussed and agreed upon, it's now time to sign the buyer agency agreement. It's basically saying that you, the buyer, are hiring me, the agent, to represent you, and this is the commission that I expect to get, and it details our whole legal obligation to you, and it goes in detail and legally outlines our relationship from agent-client and how that process works and what my fiduciary duties are to you. And this solidifies our partnership and me finding the home that you were looking for. Now, if you're wondering how you're going to go about finding an agent, you want to make sure that the person that you're choosing is someone that knows the neighborhood and knows the area that you are wanting to move into. Make sure that they understand the market as well. There's a buyer's market, there's a seller's market, and it changes daily. You want to make sure the agent you're choosing understands the dynamics of the market and how to work well within that market. You also want to make sure that your personalities mesh well. Sometimes people just don't work well together, and other times you get a vibe and you just know that that's a person that you could do well with. So make sure you're considering all these things when you're picking the right real estate agent. You want someone that's going to be strong and has good negotiating skills and can write the offer for the home of your dreams. This is going to be one of the largest financial investments that you make in your lifetime. So picking that right agent is crucial for your home buying process. Now that you understand the finances that you need to have and you've picked the right agent, it's time to move forward and get pre-approved. You want to be pre-approved before you start looking for homes. Most lenders offer a variety of loans. And if you work with a lending broker or a mortgage broker, they can actually go out. Consider them like an umbrella and consider all these companies that fall under them. They have a view to all of these companies and what their offerings are so they can get you the best possible situation for your income, your debt to income ratio, and your own personal financial scenario. Realtors will typically have lenders that are preferred, and the reason why you would want to reach out and ask a realtor or a friend or family, but we've had the experience of working with lenders. We have seen people get to the closing table from easy loans to difficult loans, so we know which lenders will get it done. So it's always great to ask your realtor if they have a referral. If you already know your own lender, you already have your own relationship, that's fine too. But you'll want to get a few quotes just so that you can compare and see apples to oranges and what you're looking at and really understand if you're making the best choice for that loan. And no matter who you choose, you're going to probably fill out an online application. In the application process, they're going to be looking for things like the last month's pay stub, the last 2 years tax returns, the last 2 years W-2s or 1099s, your 2 most recent bank statements. These are the common things they might be asking for in order to get you pre-approved. Now don't freak out because they are going to need to pull your credit. Once your credit is pulled, because everyone's like, when you pull credit, that might ding you 5 or 6 points when they do a hard pull on your credit. But when that window happens, you have 45 days that credit can be pulled more times over. So if you're going to different lenders, it's okay. It's not going to ding you again. So that's why it's important during this time, if you want multiple quotes, to go on and get them now because it won't hurt your credit score. Once you've turned in all of your pre-qualification information, the lender is going to come back to you and tell you what you are approved or not approved for. Now, once they find that magic number of what you're approved for, here's something I always tell clients is, okay, let's pretend that you were approved for $500,000. Great. We can find you a home for that. But what does that payment look like? Make sure you ask the lender what that payment will look like, because you need to determine for yourself if that's a comfortable payment for you. I just had a recent client and they stood firm with what they wanted their payment to be. They were qualified and approved for much higher, but they wanted to live in a very comfortable means So they went for a much lower price point. So you have to determine once your approval comes in, what you're comfortable with your payment being, and then you know what price point you need to be shopping for. Once you have this number in your mind of what you're comfortable with, now it's time to start house hunting. This is the really fun part. Now you can get really excited at the very beginning, and that's totally understandable. But once you're in this phase, you really want to narrow down what it is you're looking for in a home. You want to consider a needs versus want list. I always sit down with my clients and talk to them about what do you need and what do you want, and how can we marry this together to get the best situation for you, because wants are one thing, but needs are definitely something you need to stay focused on, and the wants come around that. So once you've done your consultation with your agent, once you've gotten pre-approved, once you know you have your savings set aside, once you've created your needs versus want list, and once you know you and your realtor are on the same page after all these things have happened, it's time to start searching for that home. You probably won't need to look at many homes once you've narrowed all this down. If you feel like you want to go look at 50 homes, then go out first and go shopping, open houses, model homes, whatever you want to do. But get that out of your system, because when it's time to actually come down to the home search, you want to be honed in on exactly what it is that you're looking for. I always suggest that my buyers never look at more than 5 homes at a time, because once you get past that, you start losing track of things. And if you have really narrowed that search down, you won't need to look at too many homes. Once you find that home, that's it. It's time to make an offer. Now you're moving into the next phase. If you've truly found a home that you know is it, you don't want to hesitate and wait too long to make that offer, because no matter what market we're in, even in a slow market, there are probably other people looking at that home too. So if you really want it, it's time to make a move. There's a saying in real estate that is called time is of the essence, and this is one of those phases in the real estate transaction and process that time is of the essence. Once you've discussed what you feel is comfortable with the offer, and your agent should be consulting you during this phase, the agent will write up an offer. You can typically expect a response around 24 hours or so. The buyer's agent can set in the offer a set time limit, and if the seller doesn't respond within that time limit, the offer is off the table. But in most cases, you will see that they will respond within a day or so. Once the seller responds, they will come back with one of 3 options. They're either going to accept the offer, which is the best case scenario. They will reject the offer, and they don't have to give a reason why, but that doesn't mean you can't submit another offer. You are fine to do that. It's okay to submit another offer if you want to. Or they will counter offer. Now, what a counter offer means is that, yes, we like your offer, however, we don't like this part of it. And it might be that they want to move the closing date from what you suggested. Or you might be asking for closing costs to be covered, and they might say, we might cover some, but not all. Or they might say, we're not covering closing costs. So whatever that counter offer is what they're coming back and saying, we want your offer, but these are the things we want. If you get a counter offer, you can agree and go under contract, or you can reject and move on to another property, or you can renegotiate and see what they say. But once you get past this phase, then you can move on to the next step, which is due diligence, or considered option period. The option period is a period of time that is negotiated in the contract in which the buyer will get a home inspection, and they will find out whatever they can about the property to see the state and condition the property is in. This gives them time to consider, do we want to buy this house, or are there things we found that have made us change our mind? And during this option period, they have the ability to do that. So once a home inspector is hired and is scheduled to go out, that typically costs around $400 to $450, and that is an upfront expense that the buyer will pay. That inspector is going to go to the home, and they're going to look at everything they can find and see the state and condition that the home is in. At the end of the inspection, they're going to provide a detailed report with findings of what they saw within the house. And their findings are usually 3-tiered. So we saw this, we recommend this, or this really needs to be done. And so you have these levels of importance of things that need to happen. So this gives you the ability to go back to the sellers and say, hey, we still want the house, but we want to have these things done. Some of the things the inspector might find is that maybe the air conditioner isn't cooling to the right temperature. Maybe it's 10 degrees off. Or maybe the oven isn't heating all the way up to the degree that they're requesting it to go, and maybe it's slightly out of range and it might need to be recalibrated. These are just some of the examples that you might run into in an inspection. Now, unless you check the box in the contract saying you are willing to buy the property as is, then you will have the ability to negotiate repairs. When I work with clients and I talk about negotiating repairs, you want to really focus on those ones that are of utmost importance, like the air conditioner, the oven, if there was some kind of foundation issue. These are the types of repairs that are warranted that need to be fixed. Once you submit this amendment to the contract where you're requesting certain repairs to be done, the sellers can accept the repairs, reject the repairs and say, nope, we're not doing any. They can counter the repairs list and say, okay, we'll do these 3 things, but we're not gonna do this one. And so again, you're going through a negotiation period. During this time when inspection is happening, it is a great time to also be doing something else, which is getting quotes on your homeowner's insurance. And again, I always love to work with a broker because they have the ability to have the best view of different companies and what their offerings are, so that you have the best choices of different insurances and what might be the best fit for you. Getting the quote at this time just gets you organized and ready to be able to keep moving forward. Depending on where you buy your home, there might be different types of insurances, and your insurance broker will be able to go over that with you, but you might be in a hurricane area, you might be in a flood zone. So these different things need to be considered, and they'll be able to look up your address and see where you are and help you find that product that's going to be the best for that home. Once this is all done, it is time to order appraisal. Now the appraiser is going to go out to the home and they're going to assess the value of the home. They're going to look at comps in the area, they're going to look at the home itself, the condition that it's in, and they're going to come back with a number. That number is what they are saying the home is valued at. The appraisal is really more to protect the lender, to make sure that the loan that they're giving for this home makes sense for the sales price versus the value of the home. Now the appraisal will come back in different ways. It's either going to appraise at the asking price, or it might appraise for higher than what the sales price is, or it might come below the sales price. If it appraises at the sales price, you're in good shape. If it appraises above the sales price, you have instant equity. If it appraises below, you may need to renegotiate the contract. A lot of times they will come down to the appraised value because the seller, if they're cooperative, doesn't want to slow down the process. So they might go down to the appraised value to keep it moving forward. Now we talked about different types of loans earlier, and depending on the type of loan that you have, appraisers behave differently based on the guidelines of the types of loans. When you're dealing with loans like FHA, VA, USDA, these are all going to be a little bit stricter guidelines within the appraisal. They're looking for things like, is there a hole in the drywall? Did someone punch a hole in it? Is there a hole in the door? Is the carpet ripped up and there's exposed flooring? They don't like to see that kind of thing. So basically, a fixer-upper is not a good idea for these types of loans. When it comes to these types, you want kind of a buttoned-up house that might have minimal repairs so that your appraisal will go smoothly. If the appraiser has required repairs, those repairs will happen and he will come back at the end to confirm that they have been done. And if you've made it through all this, you're on to the next phase, which is the final walkthrough. This happens about 3 days or maybe even 2 days prior to closing. You get to walk through with your agent to walk the house and make sure that you are comfortable and happy with all of the repairs that were negotiated, to confirm that they have been done before you actually finalize the purchase of your home. I always suggest that when repairs are asked to be done, that you request the receipts for proof of repair so that you have those in hand by a licensed contractor. This is always a smart idea to do so that you know repairs have been buttoned up and done correctly. And right around this time, you're also going to get what is called a closing disclosure. This is sent 3 days prior to closing, and on a closing disclosure, you're going to have basically a summary of all the numbers that go into this loan, including your interest rate, the price of the home, the cash to close, closing cost. Everything is summarized in this document. So you want to know in that closing disclosure that everything is buttoned up and looks right so that the day of closing is a really good day. Once you've walked through the property and you've reviewed your closing disclosure and everything looks good, you are on to the final phase, which is closing day. Based on the numbers on that closing disclosure, you will know what you need to bring to the table with a cashier's check, or you can wire the money. And the title company where you're closing at will give you those instructions on how to do that. And don't forget to bring your ID. That is necessary at the closing table. Anyone involved on the loan will need to be there with their ID as well. Most closings take around 30 minutes. It shouldn't take long, but there's a lot of paperwork in it, but the title companies are excellent at explaining every single thing that you're signing at that table. Once you are done signing that last document, congratulations, you have officially purchased your home. I hope I've helped you understand the process of buying a home, and I've gone through it clearly as to what those steps are, so that when it comes time for you to purchase your home, a lot of questions have been answered and you feel more confident and ready than ever to purchase your home. If you are looking to buy or sell your home, please reach out to me. My name is Shannon Green. I'm your local real estate agent here in Austin, Texas, and I would love to connect with you to find out how I can help you in your home journey. And I will see you on the next video.